Hi, I'm Rick Kaler. Thanks for joining me. There's nothing like a good sale to get people really excited. I know I can get excited about a good sale, unless that sale happens to be in the stock market. And for most people, instead of celebrating a chance to buy at a discount, investors panic, dump stocks, and brace for economic doom. And that's what is exactly happening now as tariffs rattle financial markets. The S&P plunged just about 3% last Monday, that's March 10th, after a 5% drop the previous week. It wiped out trillions of dollars in value. Investors are really spooked by escalating trade wars with China, Canada, and Mexico, and their retaliatory tariffs, all adding to very legitimate recession fears. While tariffs are marked as protection for American industries, history and reality suggest otherwise. Ronald Reagan once pointed out, protectionism almost always ends up making the protected industry weaker. Tariffs act as a hidden tax. The government slaps fees on imports, companies pass the cost to consumers, and Americans either pay more for the same products or buy less. Tariffs don't just raise prices, they kill jobs. The U.S. tariffs on Canada and Mexico could eliminate 269,000 U.S. jobs. Those on Canada could wipe out 73,000 more. Higher costs across global supply chains make it harder for U.S. companies to be competitive. Economic growth also takes a hit. Research shows tariffs shrink GDP by raising costs, discouraging investments, and reducing productivity. Both investors and businesses hate that kind of uncertainty. Financial markets thrive on stability, and tariffs introduce the exact opposite. Unpredictable trade policies discourage investment, raise inflation, and push up interest rates. This means businesses slow their hiring, stock values drop, and recession risks rise. Tariffs don't just affect specific products, they contribute to inflation across the board. When import costs rise, businesses either absorb those losses or pass them on to consumers through higher prices, which means an overall a rise in the cost of living. So tariffs function like a tax on consumers, with households shouldering up to 100% of the added cost. These higher prices just ripple through supply chains, increasing expenses for manufacturers and service providers, which puts pressure on wages as workers demand higher pay to keep up with the rising costs. The Federal Reserve watches inflation closely when setting interest rates, and if tariffs push inflation higher, the Fed may raise rates to slow things down. This makes borrowing more expensive, leading to slower growth and weaker stock performance. Tariffs don't just make products more expensive, they risk triggering inflation, tighter monetary policy, and stagnation. So, in general, history repeatedly shows tariffs do more harm than good. A study analyzing 5 decades of data found that higher tariffs led to persistent declines in economic output and efficiency. That's over 5 decades. A significant tariff hike can shrink GDP by up to 1.5% within 4 years, and that's a big deal. When trade partners retaliate, the damage compounds, cutting wages and weakening industries. The Great Depression offers the most infamous example of a failed attempt to protect American businesses. The Smoot-Hawley Tariff Act of 1930 raised duties on hundreds of imports. U.S. trading partners hit back with their own tariffs. Exports plummeted, industrial production stalled, and unemployment soared. When businesses cut hiring and investment due to trade instability, growth slows. Consumers faced with rising prices buy less. A policy meant to protect the economy could, ironically, send it into recession. Current fears and uncertainty over the administration's opaque financial objectives have pushed prices lower. Yet, companies remain just as valuable today as they were a week ago. The question is whether investors treat those drops as opportunity to buy or reasons to panic. For investors, and there's nothing new here, the key lesson is patience. If history teaches us anything, it's that the market eventually recovers. Those who resist panic selling tend to come out ahead. But for the broader economy, the damage that tariffs may do could take years to undo. Thanks for listening.